record. I'll hit start. And I think we are live. Okay. Okay, guys. I guess we are live. We have. I think the connection seems to be reasonably fine. Okay, guys, welcome to this particular session on MBA Prep Talk. We will be speaking about the union budget, which happened on Monday last. And to speak with us, we have Agasti, who has spoken to us quite a bit. First about how to do your CFA, and then he also spoke to us last year, just before just around the time the coronavirus lockdown started, about how the economy will look like, etc. So, Agasti, it's almost a year since we guys last spoke. Lot of things have happened in the last 1 year with the corona situation. Some of them expected, some of them not expected. So we will speak broadly about the budget of this year. The first view was there have been like multiple views. There is nothing new in this budget. And there are some people on the other side of the market which say that, okay, thank goodness there is nothing drastic in this budget, right? So what were your first views when you first looked at this budget, or you were listening to this budget?
I considering that it has been a pandemic year, many people expected that the budget would be significantly, focused on spending more than what it is focused now. Like there were already rumors in the news articles on the reduction in, especially since the CV commercial vehicle sector has been, slow, and the growth has been slow. So they will reduce taxes on that GST reduction for commercial from 35% to lower. Then there was speak of, maybe they will benefit middle class. They will give some, incentive and reduce the taxes. But what the government has done is they have taken a more pragmatic approach. Like since last year, for example, FY20, the F2021, the budget receipts are significantly lower because of the crisis, and you already have the government which has significantly increased their borrowings. So they don't want to let go of much of the GST outflow, because although it is not a luxury anymore, government, that the car is still a luxury, that the thing is still there, maybe. So government took that decision: let people play, let the middle class pay the taxes, let it continue as it is, so that maybe we can think about reducing these things gradually next year, but let's not touch the incoming, because already the revenue receipts have declined. So considering that, they are already borrowing significantly, I think in terms of the balancing of our budget, they have done a quite good job. Simply in terms of numbers, if you see, so last year our budget deficit shot up to 7.5% from somewhere around 3.3% in year before, that is in FY20. That's a significant increase. And you cannot, and the target for the government was that they will balance the budget, within the next 20 to 23, they will reduce the fiscal deficit to around 4.5%. And fiscal deficit, you can assume that it will be around 1.5 to 2% above the budget deficit. So considering that they would want to, go on that, balancing that fiscal path. So I think in that terms, the budget is significantly better, because they have budgeted somewhere around 5.1%, which will be the budget deficit, which is reduction from 7.5%, expecting that, as the economy is increasing, there will be significant money flowing in. So some of the parameters, some of the high indicators which you see, for example, the toll, the e-way bills collection, the freight, then electricity consumption, it has increased. And basis
I think
that
GST has actually reached.
Yeah,
GST has actually reached all-time high. I mean, like January was the highest ever GST collection, and like for 4 months in a row now we are at that significant psychological mark of 1 lakh.
1 lakh
crore per month.
Yeah. So it is not significant improvement over FY20, but still it is on that part, because you saw a dip in FY21. I mean, so now since
it was pretty bad. Yeah.
So considering that, I mean, it's a
okay. So Okay, so the thing is, as I said earlier, I mean, a lot of people have said compared it to the supposed dream budgets of 91 and I think 97 when Chidambaram produced that budget. Some people have said that it's a completely crappy budget, which is always, unfortunately, the way these things play out, that is how it is going to be reacted to. I mean, because these days nobody makes any uh, objective judgment anymore. I mean, it also is about which
Absolutely.
party
I mean,
you
it
are in
depends
from.
upon
But
which
that
area
said,
you
we
are.
will try to, yeah. So we'll try to focus on a few things which basically make sense for us in general and MBA aspirants in particular. Is basically we'll first look at what is the state of the economy like. There was a couple of things which are spoken about in the economic survey, which was about the credit rating of India, and there was basically a lot of moaning going on, like, India is not fairly treated by the credit rating because you work in securitization and credit rating affects you directly. So we'll speak to you about it. We'll also speak a little bit about COVID, infra, some amount of disinvestment, and see what the budget basically looks like. What are the growth opportunities? What are the weakness areas? And where is the economy right now as such? Okay, so let's look at the economic survey, because that is where it started, right? I mean, like, economic survey sets the backdrop of what it is supposed to be. Now, there are two things which were really, really significant in the economic survey. The first thing is that I think after a long time, they actually accepted that India's economy was in a pretty bad state, right? Before the COVID itself, it was not doing that great, and COVID basically brought it down. So the growth was supposed to be, we are going to go down by about 8% this year. That is the average general consensus here, and next year it will bounce back to 12%, right? Roughly about 11 and a half, 12%, seeing that we will be roughly about 2.5% above 2019 levels. So do you think that this is like the V-shaped economy that people are saying, or is it like the K-shaped economy, or the L-shaped, or the U-shaped? What is the shape of economic recovery which is going on?
No, I still think it's be a V-shaped recovery, simply because an 8.8% decline in economy has already put our economy down significantly. So I mean, if the economy, see, structurally there is no issue with the economy, right? It's not that something is going on wrong with the economy and that's why the economy is crashed. It's a pure external shock which has come in. Uh, will there be still an output gap if this shock had not happened? Definitely yes. Like, if you see in a long term, even 3-4 years down the line, our economy would be 10-15% lower if this shock has not come in. Like, you cannot, like, for example, services, you cannot get back. Like, if you had a haircut once in 6 months, then it's not that because there's a pent up demand and you're going to have 3 haircuts just to compensate. It's not going to happen. You lost that, especially in services, right? In
Yeah.
goods, yes, I mean, yeah, you are supposed to buy a car, you waited because you are money problems. And on the good side, definitely it will come, but in the services side, you are not going to do 3 trips next year because you missed 1 trip this year. Like, so those sort of things that will permanently be there. So yes, I feel that the economic although the economy, some part of it, you will never recover again for the foreseeable future. But since the economy has come down 8.8% around, 11% is not unrealistic, since if you consider the base as FY19,
Yeah, base.
yeah,
Yeah.
you will be nearly catching up to go to next to the base, which is still not enough in many ways, because for India to give employment opportunities to the incoming population, it's significant. It is significantly stressed. The job market has declined. If you see across campuses, across colleges in India, the job market has in terms of the placements, in terms of summer internships people are getting, we'll already see that trickle down. But after this year, definitely I expect things to improve, because this year definitely there was
Okay.
yeah. Go ahead. Yeah.
So you spoke about jobs. I mean, a lot of people are saying that jobs was something which really, really were impacted in the last year, right? And you see Narega receipts. I mean, Narega expenses, they have gone up by almost 20%. CMI predicts that the unemployment right now is 10%, maybe even higher, which is there. And it says that quite a few jobs are never going to come back again. So, and you spoke about growth as such, right? I mean, even if it is reach 3% above 2019 levels, it's probably not enough. I mean, we probably need to keep growing at 7%, 8% every year for us to actually justify the number of young people coming in and joining in the workforce every single year. Right. What is it in this budget which you think is going to help in that aspect? I mean, I know they have supported a lot of large industries. They have supported a lot of very weak sections also. I mean, like a vaccination, they have given enough money. But is there anything in with regards to jobs or job creation in this budget which caught your attention?
See, one thing, the way a government thinks about job creation is, in terms of reducing the regulation, so letting the businesses, and that, even in the five pillars of Atmanirbhar Bharat. So one of the pillars for them is lesser and lesser regulation in each of the sectors. Even for they have done minor tweaks in simple definitions like what constitutes an MSME, so that more money goes to the increasing the net worth requirements, which are the industries, so that more money goes to these small MSMEs, for onward lending. So these are the things which are small tweaks they have done. In terms of direct benefit, I would say disinvestment would significantly help, because what government is trying to do is trying to see many of these industries are significantly what you can say, inefficient industries. So by building in efficiency, they're trying to increase the amount of like how corporate activity is going to play out. Even in terms of, for example, coal industry, for a sector like coal, they are trying to reduce the monopoly. So more corporates come into the coal industry and start establishing their businesses in coal industry, and this entire industry becomes a self-sustaining and not just draining of resources from the government. In terms of Manrega, yes, if you see the receipts, they have Manrega, the funding to Manrega has increased. Last year it was significantly there. It was somewhere around 4 lakh crore, and this year they have budgeted 2 lakh crore. But for as far as Manrega, what we have seen is every time the actual expenditure goes significantly above the budget. So yes,
I think it's written in the law there. I mean, you cannot deny that. I mean, the government cannot stop the funding. I think that's what I read somewhere. Exactly. It's written out in the law.
Yeah, and last year especially, they wanted to push more money somehow as much as possible via Manrega or any other means to the people. So Manrega was one of the easiest way to push the money. So the actuals increased by around 266% compared to what they had budgeted.
Yeah.
So in
budgeted for.
Yeah. So exclusively, if you see in terms of job creation, I wouldn't see that there is a direct like these would the government would create job apart from Manrega, because so what they're trying to majorly do is push funding, financing, lesser regulation, and that way to get more jobs, rather than saying we'll directly create jobs or something like Manrega. So that anyway is not the most efficient choice also, because you don't let the government decide how many people are hiring, because ultimately that turns into most inefficient process. So reduce regulation as much as possible. Let the industries hire people. In terms of even agriculture government is pushing significant reforms. There was transport of commodities was already from one state to another state. They had reduced those barriers. So already in those aspects, since agriculture was one of the silver lining for the entire because agriculture grew in last year compared to other sectors. So it is important that we focus on removing as much as barriers possible in agriculture sector, so that one is that it becomes more efficient, people can produce more, sell more, get funding easily, and also that people move from agriculture to other areas. When they have some money, they go to college, they are educated, and they can move from agriculture to let's say manufacturing and those areas. So those are the
actually, I mean, like it is at least one part which I really like about this is that it is not going the complete left economist way. Like the best way to create employment is let people dig out I mean, dig holes in the ground and let another set of people fill those hole bags, you have employment in the country. At least
Yeah,
it is not doing that. I mean, at least it is giving the people, telling them about, it is the private sector which is actually going to, uh, push the India's growth as such. I mean, government can only support them. It is not going to help. Okay, now the second part, which with respect to the growth in the economy, is one thing which again the economic survey also pointed out was that India's credit rating, and it affects you quite a bit because you work in securitization. India's credit rating has been consistently lower than what it should be. So I think the economic survey made a big rant about if if you have the fifth largest economy in the world, right? So it has been consistently rated either as, before China became the fifth largest in the world, it was always a triple A rated or a double A rated, if not a triple A rated. The moment China came in, China was A rated, and the moment India came in, India is barely triple B rated. Right, most of the time it's barely investment grade, and it
yeah.
says that it does not reflect the size of Indian economy as such. What is your views from a credit rating perspective, and is there any truth in the fact that India is probably being you know
So
biased, they are biased against?
definitely, I think that, see, one of the reason why, see, that the way rating agencies, many of the rating agencies work is that they will analyze they will take the most conservative approach to what their view is on a particular country, unless that there is a way that the market prices these country better than what their view is. So for example, if India issues, let's say, USD bond, and the USD bond yields of India are comparable to, let's say, assuming something like France, or someone like it, some like France, or UK or something. So they will then automatically reprice their analysis. Also, that's how even equity analysts work, and many times in large banks and research departments.
Market telling them that,
Yeah, so there's a strong
that's basically the
reasoning.
market telling them you have to lift up the.
Yeah, the market telling them you have to lift up. Like, you don't, if for example, if you do fundamental analysis of an equity, then almost always you will get your value will always be lower than what is in the stock market. But you can't do that, because then so that means the market knows much better than what your analysis is. So that approach, since India does not have a USD listed bonds or USD bond, that that is one thing which might be impacting our rating. Maybe if government of India starts initially a token issuance of USD bonds, that would be help in us getting a better rating, which is already in the talks that this year or next year maybe India will issue USD bonds. So that is one. On second, yes, definitely there is a clear, like, a country like Cambodia is rated similarly as India, which is completely preposterous, right? I mean, India is a much stronger economy than Cambodia. So I wouldn't put much thought into how these external rating agencies are rating India. On other parameters, like let's say debt to GDP ratio, India is significantly better. Okay, you compare even compared to countries like China, which has way like 200, and Japan to 50%. India is somewhere around 48-50%. So in terms of and India does not have a dollar debt, so that should technically be given uh, as a good thing for us, because if especially in terms of crisis, let's say the money is flowing out, and then the government then has to print money to finance debt, etc. But we don't have the sovereign does not have a dollar debt. So whatever INR debt, any day they can print money and they can finance it. So considering all these things, and that we are not running significant debt to GDP ratio, I think we should be rated much better than what rating agencies are given India. And that's just the inertia, I think, from rating agencies perspective, because it doesn't matter to them. I mean, it does not reflect. Like, tomorrow, if your USD bond is there, and it's significantly lower yield, then questions will arise for them that why is it happening. So
So there
that's
are there are two points which are against, which a lot of people have actually said on the other side, why India's rating is lower. I mean, while India's size is pretty high, if you were to look at it, India is fifth or thereabout, fifth or sixth or thereabout. It's roughly the same size as, say, Germany, right? The economies of Germany and India are roughly the same size, but India's population is roughly 20 times the population of Germany. So if you were to look at on a per capita GDP basis, right, Germany is 20 times more productive than India. I mean, on a per capita basis, given the size of Indian population, it probably does not justify India that the GDP has been too low. I mean, and it has been, I mean, we probably were too socialist to begin with when we started the country, but yeah, so that is a historical baggage that we taken. Second thing which people speak about is that the quality of data coming out of India is very iffy, in the sense like our GDP numbers have been changed so many times in the last 7, 8, 9 years. I mean, it has not been very clear about like what the statistics are. We don't get statistics on time because most of these, somebody like an IMF basically does not generate statistics on its own. IMF basically processes the statistics which are given by India only, right? I mean, they don't generate their own statistics. What is your view on this?
No, I mean, in terms of data, you can, India is not the only country. I mean, apart from the maybe
That is true.
G10 countries, even I mean, data coming out of China, how
China is very iffy. I mean,
how it hides, but still it has got, it's I think it's an A-rated entity, A or A plus.
Yeah, it's an A-rated.
Yeah. So I don't think that data, like especially the current high, like you have so many high frequency indicators which are available every month in India. It's not like there is no data. Like GDP data is not the only criteria you use to analyze the country, right? There is amount of how much freight has been moving, what is the power consumption, all these things. You can use these to justify a higher rating, and not just say that we are not convinced that GDP data is we are changing so many times, and that's why it is not proper. So and rating is not more about how high the figure of GDP is. Yes, I mean, more the GDP is, it will definitely impact, but it's also about fiscal prudence of that particular country. And if you see fiscal prudence, I think, I mean, India is one of better countries in fiscal prudence compared to other, I mean, countries which have been rated similar or higher than India. So that is the reason I feel. So you can say that India may not be justified, let's say A plus rating, but at least A minus or A rating is something. A minus at least is something which is India is justified for, and not a triple B minus.
I mean, it should not be the lowest. Just about investment grade. I mean, like that should not be the one. I mean, it should be definitely better than what.
Yeah, so it's like since they have given it just a rating just above investment grade to say that India is not a junk country where it will default, but they are not confident enough to push it in any higher. So that is something which
slightly higher league. Yeah.
That is when you do when you don't. When a company, for example, when you rate a company, it's like a company is not, it's paying its debt and all properly, but you don't want to increase it any further because you don't have any idea where this how the performance of that country will be. You can't judge it, so that's how you keep it. So on
the BCG matrix, India is a question mark.
Yeah, so so generally also,
so in the BCG rating, India is a question mark.
Yeah, so we don't they don't know, but I think that's the reason. If the market were to price it, I think India would be better, because market knows better than, I mean, analysts.
Yes, that is true. Okay. Okay. So now the other significant part of this year's budget was the focus on disinvestment, and basically government saying that we are basically going to be in 14 strategic areas. I mean, it is divided into 16, 17 subsectors, but four strategic areas. And basically we are going to push out of all this. And as a result of which, they have put in about 1.75 lakh crores as a disinvestment target for this year. Now, there are some people who say that this is awesome. There are some people who point out to the last year's number that it was 2.1 lakh crores and they got only about 30,000 odd crores as a realization. So while the target was fantastic, the realization or the actual the achievement was not that great. And given that this year we are putting up companies again, I mean, like something like an LIC, right, which is going to be now on the blocks. It's pretty difficult to get this sort of a company. We are not going to sell LIC. We are going to just release an IPO and unlock the value of it. But there are a lot of other companies which are small companies which the government has no business into. Like, I mean, I think there are, in India also has a Hindustan Latex Limited, which basically manufactures condoms. There is a Scooters India, where when nobody in India is buying scooters. There's a Bicycle Corporation of India. All these multiple sort of things. So while it is a great thing to do, I mean, like, this investment, always privatization is always welcome. The problem is these things there are no easy targets anymore. Like, I mean, for example, even to sell a BPCL, it's very difficult to sell a BPCL right now. There are, like, you are going to get only 1 or 2 bids. But with the stock markets at such a high levels, do you think people are going to they will be able to succeed in this year's target?
See, last week we have to give little leeway to the government for last year because the energies were focused not on disinvestment. I think last year disinvestment was the least on the government's mind when they were struggling to understand how to deal with the pandemic itself. So last year I would give the government a leeway. A year before that we hit a 1 lakh crore target, so I would consider that as a benchmark and instead of last year. And yes, around 1 lakh, 1.2, 1.5 lakh crore would be a realistic target, considering that, in 2018, 19, 18, 19, it was already there. But the entities which are there, apart from, like, for example, Air India, I'm not sure how the government would be, because it's still struggling. The government has been struggling for that with, like, I think 3-4 years now, maybe more, to sell those assets, because they don't want to sell, break up into individual parts of the company. Then they were okay with selling some of the parts. So it's not still sure that how successful Air India sale is going to be. But the other aspect of the LIC, so they have done two things simultaneously on this front. One is that they are thinking of privatizing, IPOing LIC. At the same time, they have increased the insurance limit to 74%, which
74%.
74% FDI limit. So it just shows that the government is thinking on both sides. It's not just that it is thinking of disinvesting, but it is actually increase that limit so that more money in FDI flows into India, and that the foreign investors see that India is making a genuine progress. And it's not like let's say a Saudi Aramco, where they will diversify just 5% but maintain control. Though that still they have said that up to 5% till in next 5 years they have been very, very clear about that the controlling, even if you up to 25%, let's say, is diversified, even then they will have, whoever is the private investor, they will have just 5% voting rights, which is nothing. But at least that the fact that they are amending the laws to make LIC, like, they can sell up to 51%. That's how they will amend the laws, that up to 51% diversification be possible. After that, they will take it up in the future. So, but at least that clarity is there with any investor, and that's a good thing. On the other two parts, there are other two companies like Pawan Hans, which is a helicopter manufacturing company, which is a big name so that's they're going to diversify, which is, I think, it's not a big a brainer, because helicopter manufacturing, private helicopter manufacturing, it's all right. Then the other two areas which they are going to diversify is PSUs. So public sector banks. Now, public sector banks, of the IDBI bank, already they are diversifying. They are privatization will be completed by this year. Plus, the two names which are going around is Bank of Maharashtra, maybe IDBI Bank also, Indian Bank also, which they are trying to privatize. And considering that there will be a still significant union protest against this, considering that government is already grappling with one protest already, I think it shows a significant resolve. Because if you do not push through, then every time you drop something because of the protest, people are going to get emboldened not to that they will get their way, and you cannot push this reform. And it just tells you how significantly difficult it is to push these reforms. Even now, we are not sure that how many more protests might happen in India this year because of the government's push to
I think from the time of Singh itself, they wanted sell off banks, some few. So bank privatization has been, has been going on for quite some time. Again, the problem is it's almost like a feature every year where
Mhm.
you basically have bank privatization, will do this. Unfortunately, it doesn't move beyond it. And the problem is, it is, I think, complicated a lot by the NPA situation of the banks, right? There is, I think, for the first time, I think they have officially said that we are going to set up like a, a bad bank, so to speak, right? I mean, that has also been going on for quite some time. Given that you also work in the securitization industry, what is the status right now? I mean, like, uh, how is the scenario working over there, especially with these loans and the balance sheet problems which all these
So,
financial institutions are
so
facing?
one thing which happened significantly, like for last year, is that the moment like it always happens, the moment there's a crisis, the bank funding freezes up. The one decision banks do is that they say that let's wait. But especially during a crisis, let's wait approach is very very bad for the underlying borrowers. So then the RBI came up with significant liquidity measures to improve those conditions. So they started these TLTR operations where they were basically giving money to the banks for peanuts. Like they were saying that, see, I'm giving you money at repo rate. Okay, you invest in anything, you'll get money. Basically, I invest in let's say AAA rated also, I'll get money. I invest in triple B. So you invest in anything, but just invest it. Okay, so that's how TLTRO started. And NBFCs lapped up this money. They very much wanted this money, and they lapped up this money at significantly very good rates. And as a result, they were able to at least fortify their balance sheets and because prevent against the future cash flow mismatches which over next 6 months which happened, plus the NPAs which would arise out of it. So for example, for the last 6 months, so not for the last 6 months, sorry, for the after March, for 6 months there was moratorium which was offered by RBI. And because of this moratorium offered by RBI, a lot of these loans which would be generally classified as NPA were not classified. And so although in reality those cash flows, you're not getting the cash flows anyway, even if it is not classified as an NPA. It's just a matter of provisioning from their perspective. But the actual situation is still bad. Even if the classifying is something, is just a making entry in a book, right, and making provision against it. But even if you don't classify it, as the problem persists. Now those problems started unfolding after the moratorium was exited. So after moratorium came out, initially the NPA numbers, GNPA numbers spiked off from September, November, December. But from December, what we are expecting is that these numbers will going to come down, because now that as the things are normalizing, the collection efficiencies are expected across industries to go up. There were some industries and the majorly in cases of secured asset classes, like for example gold loans, business loans which are secured by property, or housing loans which are again security, and people generally they don't default on housing loan easily. So all these secured asset classes, the collection efficiencies still remain higher compared to unsecured classes like unsecured business loans or microfinance loan, where you or personal consumer finance loans. So these asset classes saw significant spike in NPAs, and which obviously is causing significant trouble to these companies, because you have different covenants on your books when you take loans that you will not, your NPAs won't exceed, and suddenly the NPAs are spiking. But considering the trend that on ground trend, that collections are still coming back, and we see that it is already seen in the securitization volume. So in the first half, the securitization volumes were down significantly. They were down like 50-60%, and there was next to nothing activity, especially in the lower rated segment. In a higher rated segment, like a AAA, AA entities, they continuously do securitization. That is, below AA rated entities, we saw that the volumes declined. Because the companies were not, the banks, everyone was not sure that what is going to happen, and these guys, they don't have a strong balance sheet, and etc., whatever they are. But in the Q3, we saw significant increase in securitization activity. And in Q4 also, we are expecting it to continue. So maybe next year, it will at least go back to the path before, because securitization was increasing by around 30% every year before the crisis, before it dropped. So that's and securitization is a very, easy way for companies to raise financing, and while reducing their cost related to compared to the other costs like funding cost, and investors get access to directly investing in the underlying asset class rather than a company. Like I'm taking exposure onto directly to the underlying loans, which is which it's in itself creates a new asset class. So this growth in securitization volumes I see definitely happening post this Q4. Q4 is already a significant, as also the liquidity, which already the NBFCs are flush with liquidity from TLTRO, that will also phase out. So they will have, they will have to move, because they will have no choice but to start, normal issuances, funding, etc.
So I mean, we have discussed a whole bunch of topics as such. I mean, before we conclude, I just want to know a couple of things as such. I mean, can you tell me like 3 areas where you are concerned in this budget, and if these 3 things go wrong? I mean, there are certain assumptions which every economist, financial planner, everyone makes, that okay, these are the things I'm assuming, like this is what is going to happen. This is my future. This is my expectation of the future. There is some buffer over there. And if this environment is going to hold on, I'm going to achieve this growth. So even our finance minister would have done something like that. So what are the 3 things where you feel that, there might be problems, or 2 or 3 things which you feel that there might be problems that this budget will face in terms of realization? What happens, say, suppose 1 year down the line when we actually discuss this might be the causes which will probably make it derail from what was expected.
Uh, One significant worry for me is directly current ongoing protest, especially farm protest, which can obviously, if the government is occupied with protest, they are not going to, for the lack of any other word, work on any other things. So, and that's one of the major concern going into next year, that it will further intensify and affect our that recovery path again for this year. That's number one. Uh, Second, I would say, is the recovery in NBFCs, especially because I'm not sure if we have already done enough, or there will be an additional support needed to a lot of these, especially MFI entities which are there, because they are funding end consumers, right? So already a lot of even MFIs, when people underlying borrowers default, they are not going to lend them, and they might as well go to money lenders, and as a result it goes into a vicious cycle. So what I mean, will the government has done enough to give funding to the lowest bottom of the pyramid? It's still to be seen, because there is no direct support to NBFCs, MFIs, which I see in this budget. So this is something which, as the situation evolves, if the government will have to take a call, and that's one another worry. Another third last important point, I would just say that, as you said earlier, that whether we are going to actually meet the disinvestment target. I mean, it's not happening fast enough, because there is significant value to be unlocked there. Every minute, every day you waste is a value destruction that these PSUs are doing, and you don't want to watch that. Like, you don't want the taxpayers' money to go wasted every so there's a better use for taxpayers' money, right? I mean, while you're not while the government is not able to provide significant basic services for people, I think wasting their money on running private sector enterprises is that's something that they should not do. And even as far as the socialist measures are concerned, it would help the socialist measures also if they just diversify, sell these companies. So those are my 3 words. I think you're on mute. Sorry.
I said, yeah. I said, if you have the money, you can actually expand your social security cover.
Yeah, absolutely. Yeah.
I mean, that's why growth is more important. I mean, inequality will reduce. I mean, if you have growth, inequality will, okay, it may not reduce as fast as people expect, but it will definitely be way better than having zero growth and everyone becomes,
also
poor.
It is about the bandwidth of people and what government should focus on. Yes, government should focus on welfare. Government should not focus on running companies, right? They should focus on how to regulate the industry. They should focus on making laws. They should focus on how to get the people at the bottom of the pyramid
govern.
They should not focus on how much what is going to be return of this BPCL. Am I going to increase or decrease? That is something which let the market decide. Let the professionals take that place. There is so much already. There are people who are ready to enter that space. Yeah.
Yeah,
So
that's true. That's true. Okay, cool. And on the flip side, are there anything where you think that the government is too conservative and there is a hidden bonanza for us?
uh, well, I don't. The thing is,
Besides
I'm not.
disinvestment, I mean, if the disinvestment target hits, yeah,
Yeah, if the disinvestment target hits and for example GST collection, then the government might come to may have some bonanza for the middle class in terms of taxes. But until something like that, like if the receipts are not significantly good, or even disinvestment targets are met, I think the government wouldn't decrease that tax rates any longer. I mean, that's just
okay,
not happening. I mean,
okay.
however you might wish.
Uh, okay,
Because that's what
guys,
something which most
thank
of
you
the
very
people
much
are
for.
looking
Yeah.
forward to. Yeah. So
Okay. Thanks, Agasti, to come on a Sunday and speak with us. Guys, in case you
it was
like
my
this
pleasure.
session, please do share this with your friends. Agasti's LinkedIn profile will be available in the description of this particular video. In case you want to connect with him over there, you can do it. Uh, you were watching MBA Prep Talk. We'll see you again next time. Goodbye. Stay safe. Bye.
Thanks.
Just 1 minute.